Trading on an FOMC week can be brutal. Price is super choppy, very indecisive. The market is going to fake you out 1,000 times over, and it's just almost impossible to catch entry and exits and actually make good money. And a lot of professional traders don't even trade on weeks like this. I'm going to show you guys exactly how you could have taken a trade that ran to 300% from the 5-minute time frame on SPY. So I want you guys to take a look at the 5-minute time frame on SPY. You guys can see that we have price kind of consolidating and then having a huge move and then consolidating for very, very long amounts of time and then finally breaking out. But by the time we break out, you are unsure of what you should even be doing at that point. There really only is one thing you can do, and that's take trades out of supply or demand zones. So you guys can see that we have price pull back into the supply area. We have a push down to 558, and then we pull right back into this supply area. So at the moment, we have this double top formation on our M5 in our supply. We fail to create a higher high and start pushing to the upside. And then as you guys can see, we do get that flush after we pull back into the supply. But now you're wondering, how do I know when to get entry? So if you guys look closely, you can see that we do pull down, create this swing low right here where this X is, and then we pull up and we have strong bearish momentum candles followed afterwards. All I was waiting for was price to break below our 20 and 50 EMAs, which are these yellow and red lines. And once we got below those yellow and red lines, I caught my entry right here. So here's exactly what this trade looked like in real time. I ended up taking my entry under 560.50. I hopped in the SPY 554 puts, and you guys can see we got that nice 100% return, and that was it. All you have to do is target your previous demand level. And we did have a little bit of consolidation, but I did have my stop loss in place. So I was able to stay in this trade even after it going a little bit red, followed my rules, and I caught that huge move down. Trust me, I'm well aware that trading on days like today are very intimidating because there's so much chop, a lot of indecision, a lot of big candles that are going back and forth. A lot of times it's smarter to just stay off. But if you are experienced and you follow your rules and you enter in optimal trading zones, such as supply or demand areas, you will be fine. You just have to wait, be patient, and execute perfectly. And worst case, that's what a stop loss is for. You shouldn't be losing money that is going to affect you in the long run if you have stop losses in place. If you are trading the right way, it shouldn't hurt you. That's all you have to do. I will preach stop losses over and over and over because the only way you'll ever be profitable is with managed risk.